Good afternoon and welcome to your weekly FX options report. Today is Wednesday, January 20th, 2010. In midweek trade, the U.S. equity markets are seeing downward pressure with the major indexes down by over 1.5%. Now, key bank earnings had been in focus this morning with Bank of America, Morgan Stanley, as well as Wells Fargo reported their earnings. Now, they did show improvement in the fourth quarter, but there are still signs of lingering credit troubles. And on the fundamental front, economic data releases as well as developments out from China were in focus. Now, in terms of fundamental news out from China, there are more expectations that the country is on the path to monetary policy tightening. Now, China also said that it will be curbing lending due to concerns over asset bubbles. And here in the U.S., in terms of economic data releases, we got both housing starts as well as PPI figures for the month of December. Now, housing starts came in lower, down by 4% to a seasonally adjusted annual rate of 557,000. At the same time, building permits came in higher for December, up by 10.9%. And PPI in the U.S. for the month of December edged higher, up by 0.2%, while core PPI remained flat. Now, shifting our focus on over to the spot FX market, both the U.S. dollar as well as the Japanese yen continue to extend gains. Now, we did see that the euro dollar fell not only below the 1.4150 level, but below that key 1.4118 level to trade below the 1.41 level in midday trade. Now, we're seeing that both the yen as well as the U.S. currency are higher due to safe haven demand. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at IC's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. Now, let's take a closer look at the major FX option pairs in your daily technical trend report. Let's start out by looking at the AUX, which is the US dollar against the Australian dollar. Now, for that pair, the bias does remain bullish. It is also shaping a rounding bottom, which does call for a bounce. The preference of trading central analysts for the AUX is long positions above the pivot of 106, with targets standing at 114.25 and 118.15 in extension. Now let's move on to the BPX, which is the US dollar against the British pound. For that pair, the upside does prevail. The RSI is supported by a bullish trend line, and the preference of trading central analysts for the BPX is long positions above the pivot of 60 with targets at 63.50 and 65.50 in extension. Now, very quickly, let's take a look at the CDD, which is the US dollar against the CAD. For that pair, a rebound is expected. The RSI is turning up, and it has rebounded on its support, which means it should post a further up move. Now, the preference of trading central analysts for the CDD is long positions above 102, with targets standing at 107.50 and 111.25 in extension. Now, looking at the EUI, which is the US currency against the euro, a bounce is expected. The pair has validated a bullish flag and should post a further up move. The RSI for the EUI is still supported by a rising trend line, and therefore the preference of trading central analysts for the EUI is long positions above the pivot of 68.50 with targets at 72 and 73 in extension. Now, very quickly looking at the SFC, which is the US currency against the Swiss franc, a continuation of a rebound is expected. The pair has rebounded on its support and is currently approaching its resistance. So for the SFC, the preference of trading central analysts is long positions above the pivot, which is currently at 101, with targets standing at 105.10 and 108 in extension. Last but not least, let's take a look at the YUK, which is the US currency against the Japanese yen. For that pair, the upside does prevail, and it is pulling back on its former channel resistance, which should now act as a support. The preference of trading central analysts for the YUK is long positions above 88 with targets at 93.50 and 96 in extension. Now let's move on to your weekly trend opinion. Now, last week the US dollar did lose ground against the major currencies, and because of that, Trading Central did take a few chances to take advantage of the weakness and enter new US dollar positions. So therefore, for the portfolio performance for IIC's FX options, it currently does stand at 1,357.33% since its inception, which was in August of 2007. And since the beginning of this year of 2010, it is currently up by 56.52%. Now, we do have a few trade alerts for you right now, and we're going to start out with the EUU. Now, Trading Central did recommend in their last follow-up to buy puts on the EUU, which is the euro against the US currency. Now, for that trade alert, it has struck against its new resistance, and it has validated a bearish flag pattern, so that should lead to a further down move. Now, Trading Central analysts do also recommend calls on the PZO, which is the US dollar against the Mexican peso. That pair should rebound on its channel lower boundary. Now, the daily RSI for the PZO is still supported by a rising trend line. Now, looking ahead to next week, Trading Central analysts should continue to enter new long dollar positions, and they will be keeping an eye on the BPX as well as the AUX and the SFC. They will be looking at the BPX because it is pulling back on its new support, and the RSI is still well directed. At the same time, a rebound is therefore expected on this pair. And in terms of the AUX, which is the dollar against the Australian currency, it is still shaping a rounding bottom, and a break above an intermediary resistance will call for a further up move. And last but not least, they will be keeping an eye on the SFC because it has rebounded on its strong support and should post a further up move towards its next resistance. And that does wrap it up for your weekly FX options report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a good day.